All right, let's get into it. Today, we're going to dig into a question that ties together the ancient world and our digital one. What really gives something like money its value? We're going to follow this incredible thread that starts in the Roman Empire, runs through the tulip fields of 17th century Holland, and lands right in the middle of the code that powers our world today. So let's kick things off with a bit of a puzzle for you. What on earth could possibly connect a silver coin from ancient Rome, a delicate flower bulb from the Dutch Golden Age, and a digital asset that only exists as, well, data? I mean, they seem like they're from different planets, right? But they all run on the exact same invisible and very powerful engine. And there it is. That's the secret sauce. Collective belief. It's the simple but kind of mind-blowing idea that something has value only because we all agree that it does. It's just a shared story, really, a kind of social contract that holds up our entire economy. And, as we're about to find out, that story can be unbelievably strong, but it can also be terrifyingly fragile. Okay, so to really get a grip on how that belief gets tested, we first have to be on the same page about what money even is. So let's break down its most basic functions. If you ask an economist, they'll tell you that for anything to count as money, it has to do three specific jobs. First, it's got to be a store of value, meaning you can hang on to it and it'll still be worth something later. Second, it has to be a unit of account, which is just a fancy way of saying it's a yardstick we all use to measure prices. And finally, it has to be a medium of exchange, the thing we all agree to use to buy and sell stuff. And wow, has this idea changed over time? I mean, we started with bartering, right? Trading your chickens for my wheat. Super inefficient. Then we moved on to precious metals, gold, silver, things that were tough and didn't just pop up everywhere. But today, most of what we use is what's called fiat money. And it's not backed by a physical thing anymore. It's backed by something way more abstract, just our trust in the government that issues it. And this just nails the point, doesn't it? The cash in your wallet, it's really just fancy paper. The only reason it has value is because you believe someone else will accept it as valuable, and they believe the same thing about the next person. But what happens when that belief gets pushed to the absolute breaking point? Well, let's take a look at our first case study, the legendary Dutch tuliponia back in the 1630s. This is a textbook story of how our collective belief can spin out of control and turn into a collective delusion. Get this, at the absolute peak of this craze, a single, rare tulip bulb, a plant that flowers for maybe a week a year, could sell for 10,000 guilders. To give you some perspective, that was enough cash to buy a giant, beautiful mansion right on a canal in Amsterdam. This was not about gardening anymore. This was pure, uncut speculation. And the crazy part is how fast this all went down. The mania really grabs hold in 1634. Just 2 years later, they've got formal markets, like stock exchanges, just for trading tulip contracts. Prices go absolutely vertical in early 1637, and by the end of that exact same year, the whole thing is in a catastrophic freefall. A very fast and very brutal lesson. And what tulip mania left us with is basically the perfect playbook for what we now call a financial bubble. It all starts with these wild, irrational expectations. That fuels a massive price surge. Then you get a feedback loop, right? Everyone sees their neighbor getting rich, so they jump in, pushing prices even higher. And then the moment of realization hits. The panic starts, and then comes the crash, which just evaporates entire fortunes overnight. Okay, so that's what happens when public greed runs wild. But that's not the only way belief in an asset can totally collapse. Sometimes the danger comes from the very people who are supposed to guarantee its value, the government. And for that story, we've got to go all the way back to ancient Rome. And this is a really key distinction. Tulip mania was a wildfire started from the bottom up, by individual people chasing a profit. What happened in Rome? Well, that was more like a controlled demolition from the top down, a total destruction of value, all orchestrated by the state itself. So, how'd they do it? Well, the trick was something called currency debasement. The emperors were short on cash, so they started mixing their silver coins with cheaper metals like copper. I mean, just look at this. Under Augustus, the main coin, the denarius, was almost pure silver. But then you fast forward to Emperor Aurelian, and that same coin is only 5% silver. They're basically printing money by melting down old coins and minting a bunch of new, worthless ones. And the result of all of this? An absolute economic disaster. Inflation peaked at a mind-boggling 15,000% in the 3rd century. When you flood the system with junk currency, the value of that money just falls through the floor, and the price of everything else goes to the moon. And this is what that actually looks like for a regular person trying to survive. Around 150 AD, a measure of wheat would cost you half a denarius. By the year 338, that same amount of wheat costs 10,000 denarii. Just let that sink in for a second. This wasn't just some number on a spreadsheet. This was a society-level crisis that completely destroyed the trust that held the entire empire together. So we've seen the mechanics of how these things fall apart, from both the private and public side. But that just tells us the how. The much more interesting question is the why. What is it about us humans that makes all logic just fly right out the window the second the promise of easy money shows up? You know, this quote here from the historian Charles Mackay just says it all. A speculative frenzy isn't just for the rich elites. It sucks in everyone, from the wealthiest people all the way down. That dream of getting rich without really trying is just such a powerful, universal magnet. So what's going on in our brains here? Well, there's some fascinating psychology at work. Researchers even have a name for it, asset blindness. And it's triggered by a few things. First, there's the fear of missing out, FOMO. Then there's that incredibly dangerous belief that this time is different, that the old rules somehow don't apply anymore. And the appeal of fast, easy money just becomes so overwhelming that we're willing to abandon all logic just to run with the herd. All right, so ancient Rome, 17th century Holland, they're cool stories. But what does any of this have to do with us right now? Well, as it turns out, a lot. Because these same patterns, these echoes from the past, they're all around us today. Even someone like Thomas Jefferson saw this coming centuries ago. He warned about what could happen if a central authority got the power to just create money out of thin air. He knew that it could lead to the exact same kind of state-sponsored value destruction that we saw happen in Rome. And if you think that's just some old-timey warning, well, take a look at this. During the COVID pandemic, the supply of US dollars was increased by an unbelievable 40%. Now, the reasons for doing this were incredibly complex, of course, but the basic mechanism, pumping huge amounts of new money into the system, it carries those exact same inflationary risks that the Romans and Jefferson were worried about. And it's not just on the government policy side. Look at private speculation. It's like history is literally repeating itself. On the left, you've got the price chart for tulip bulbs, that classic bubble shape, right? And on the right, you have a chart for a recent speculative asset like an NFT. The pattern is identical, a rocket ship ride up followed by a cliff dive down. The technology is different, but that core human psychology, it hasn't changed one bit. So, at the end of the day, what's the big takeaway here? The point isn't that tulips or Roman coins were always worthless. The real lesson is that their value was never really about the thing itself. It was a shared story that people told each other. And when enough people suddenly stop believing in that story, it ends. And it usually ends very, very quickly. And that's really the question I want to leave you with. In our world of digital currencies, AI, and complex financial instruments, our entire economy is built on stories and beliefs that are more abstract than ever before. So what are the shared stories we're all telling ourselves right now? And maybe more importantly, how strong are they really? How much pressure can they take before they start to unravel too?